Are you an agent working with the first-time buyers who kept getting priced out of the market? I may have a solution. What if I told you there are down payment assistance programs that could put them in homes with virtually no money out of pocket? I'm Gurfinkel, and after helping many buyers use down payment programs successfully, I'm sharing the programs that actually fund reliably. Not the ghost programs that sound good but never close, nor the local and municipal programs that run out of money, nor the local small bank and credit union programs that may or may not actually close because they may want to see the inspection on the home. So let's talk about the down payment assistance. I really wanted to talk about the national programs again, because those are normally underwritten by the lender who is approved to be a provider of those down payment assistance programs. While there are hundreds of down payment assistance programs nationwide, many can have either unreliable funding because they run out of money, or excessive restrictions, or processing times that kill deals. These nationwide programs, however, do consistently close on time because they're, at least in our case of Fairway, are underwritten in-house, we control the process, and we know how to do it. So first of all, the one that's been probably around the longest, at least it's the one that I've used the longest, the Shenoa Fund, it offers up to 5% assistance for FHA loans, and that's 5% towards down payment and or closing costs. Now, what makes it reliable is that it is funded by a federally chartered provider, not dependent on annual budget allocations or locality. The second program is the National Homebuyers Fund, the NHF. This one also provides up to 5% assistance as either a grant or a forgivable second mortgage or a normal second mortgage. The key advantage is that it works with the conventional FHA, VA, and USDA loans. Now, there's also the Arrive program, which allows for lower credit scores and works with FHA only. And those grants also can be up to 5% to help somebody get into a home. There's one more program that back in the day we used to do a lot of. But right now, I'm not seeing as much of it, but it's still worthwhile to at least educate everybody on. And it's the Good Neighbor Next Door, the GNND. This one actually offers a 50% discount on HUD homes for teachers, law enforcement, firefighters, and EMTs. The key here is that those have to be basically the foreclosed HUD homes. The inventory is super limited, but when available, this is the most generous program, bar none. And I've personally closed loans with all of these options, especially in the last couple of years. So I can confirm they're actively funding and closing on schedule. Now, here's what you do need to know about the down payment assistance. They come with income limits and sometimes with property restrictions. Here is what you need to know up front to avoid wasting time with ineligible buyers or ineligible properties. For income limits, most DPA programs cap at 80 to 120% of the area median income, AMI. So for a family of four, that's typically 75 to 120 in most markets. There are, of course, markets that are higher priced where those limits are higher. Now, the Shenoa Fund and NHF programs will go up to 140% of AMI in some areas, which can be well over 150,000 for a family. Property restrictions vary by program, but generally, single-family homes, townhomes, and condos are eligible if the condos are FHA approved. Manufactured homes are typically excluded, but lately those also have been opening up in certain areas with certain programs. Now, 2 to 4 unit properties are only eligible with FHA-based programs. I would be cautious about the 2 to 4 unit properties with a down payment assist, as again, the guidelines do change, but it's something worth absolutely asking and exploring. Properties absolutely have to be owner-occupied as primary residence. We all know FHA-based financing does not allow for anything except for owner-occupied. Now, while some programs have purchase price limits based on the county median prices, most of them really go by the FHA loan limit for the area. The most important thing is to check whether again, buying a condo, this is condo specific, the condo is FHA or Fannie Freddie approved, the down payment assistance program that is allows for conventional financing. Now, I've created a quick reference sheet with all these limits by program, which you can download using the link in the description. Documentation requirements and timelines. The biggest complaint about the DPA programs is the extra paperwork and time they take. Here is exactly what your buyers need and when. Last year's tax returns if they're self-employed, 30 days of pay stubs, 2 years of W-2s if they're W-2 employed, 2 months of bank statements, all pages, don't ask. Now, this is something that I'm going to talk about in more detail, homebuyer education certificate. Some of the DPAs, not all of them, some of them do require the first-time homebuyers to go through the first-time homebuyer education and get a certificate. And this is actually quite critical because some of those programs require multiple-hour courses that must be completed before closing. So we always advise that your buyers start this immediately after going into contract if they haven't done that pre-contract. The timeline expectations. Honestly, absolutely standard, 21 to 30 days. Can we rush a DPA? Probably not advisable. Too much stress created on all parties, especially if the buyer has to go through the first-time homebuyer education again. Now, realistic timeline, 20 to 30 days. But the key to success is setting the proper expectations with all parties. And I always make sure the listing agents understand that we're using a DPA and why it might take a few extra days. Now, here is something that's a bonus. How to stack DPA with seller concessions. This is where the magic happens. By combining DPA with seller concessions, your buyers can truly purchase with zero out-of-pocket costs. And here is how. Step 1. Use DPA for the down payment between 3 and 5% of the purchase price. Step 2. Request seller concessions to cover closing costs, roughly 3% of the purchase price. Structure the offer to be competitive despite these requests. For example, on a $300,000 purchase, Shenoa Funds provides 3.5% for down payment. That's $10,500. Seller provides $10,000 in seller concessions for closing costs. That's another 3+%. Buyer needs only about $1,000 for earnest money, which can be credited back at closing. The key to making this work is explaining to the listing agent that your buyer is well qualified for the loan amount. They just need help with upfront costs. Often, offering a slightly higher purchase price to offset the seller concessions makes these offers more attractive. So let's talk about the common DPA pitfalls and how to avoid them. So here are the mistakes that I've seen agents and lenders make with DPA programs. Pitfall number 1, missing the homebuyer education deadline. Solution, start the course immediately once getting under contract. Pitfall number 2, changing jobs during the process. DPA programs are strict about employment stability, so you don't want to mess that up. And the solution, warn the buyers not to change jobs until after closing. Granted, we ask everybody to not change jobs on any loan program. On the DPA, sometimes it becomes even more important. Pitfall number 3, making large deposits without documentation. Again, it applies to pretty much any loan, but on DPAs, there's a little more scrutiny. So the solution, tell the buyers to keep their finances simple during the process and document any gift funds properly, or better yet, advise them to talk to a lender before moving any money around or how to properly document the gift funds. Pitfall number 4, choosing the lenders that are inexperienced with the DPAs. Many lenders claim to offer these programs, but do only a few per year. Solution, work with a lender who specializes in DPA programs and does them weekly. Pitfall number 5. This may not apply in all areas of the country, but not disclosing the DPA to the listing agent can be a big no-no. Solution, be upfront about using assistance, but emphasize the buyer's strong qualification and your lender's experience with those programs. Let me give you an example. A dear friend of mine bought a home a few years ago. Unfortunately, while they were more than well qualified for the loan itself, unfortunately, unexpected legal expenses came up, and what they would have used for down payment had to go towards those legal expenses. As a result, she could still buy a home, just didn't have the down payment, and the family unfortunately could not help with the gift, nor did we have any other options for down payment other than going with the DPA. Problem solved. We went with the DPA, we asked for a seller concession to pay for closing costs, and she was able to get into a home with no money out of pocket effectively, or close to no money out of pocket. And a couple of years later, the home appreciated. We refinanced it into a better loan, lowered the payments, everybody came out a winner. But all it is lots of communication with all the parties. So if you have first-time home buyers struggling to save for down payment that otherwise could very well qualify to buy a home, don't lose them to continued renting. Send me their information, introduce us, and I'll match them with the right DPA program for their situation. I'll even provide you with a custom flyer you can share with them, explaining exactly how much home they can afford with these programs. The link to my DPA qualification form is in the description. Let's get your buyers into homes they didn't think they could actually afford.